A warm welcome back from the weekend, everyone. I am Melissa Enoch here at the FMDQ studios in Lagos.
And I'm Grace Legbarago. It's Monday, June the 29th. We thank you for joining us at this time.
All right, let's tee off with news now. The Nairobi Securities Exchange has welcomed the listing of the terrific Green USD Income REIT, Kenya's first dollar-denominated green REIT. The listing raised 4 billion Kenyan shillings, exceeding its target after a 103.3% subscription, highlighting strong investor confidence in Kenya's sustainable finance market. Here are excerpts.
The terrific USD IREIT represents an important milestone, not only for its sponsors and investors, but also for Kenya's journey towards developing deeper, more diversified, and internationally competitive capital markets. Ladies and gentlemen, around the world, REITs have transformed the way investors access property investments. Traditionally, investing in high-quality commercial real estate required substantial capital and direct ownership. REITs removes these barriers by enabling investors to own professionally managed, income-generating real estate through the capital markets, providing investors with several compelling advantages. They offer regular income through rental distributions while also providing the opportunity for long-term capital appreciation. They also enable investors to diversify their portfolios beyond traditional assets for long-term capital, such as fixed income and equities. They also offer greater liquidity than direct property ownership because investors can buy and sell units at the exchange on a daily basis. Equally important, REITs operates within a robust regulatory framework that promotes transparency, professional governance, regular valuation and disclosure, and gives investors greater confidence in the underlying assets. The terrific USD IREIT adds another important dimension by providing investors with the exposure to US-denominated assets, offering a valuable opportunity for currency diversification while investing through our capital markets. Ladies and gentlemen, this is a powerful message because this REIT is oversubscribed. Oversubscription is more than a successful capital raise. It is a clear vote of confidence from investors.
Meanwhile, Egypt has temporarily listed 3 state-owned petroleum companies on the Egyptian exchange as part of its state ownership offerings program. The companies are engineering for the petroleum and process industries, the Egyptian Linear Alkyl Benzine Company, and Petroleum Marine Services. Al Mamura for real estate development and tourism was also temporarily listed. The Financial Regulatory Authority said the listings are a procedural step ahead of planned public offerings and are expected to boost market competitiveness, attract investment, and expand the number of strategic sector companies on the exchange. In Liberia, President John Boakai has banned the export of raw rubber under a new executive order to promote local value addition. The government said the policy is aimed at boosting domestic processing, creating jobs, and increasing national revenue while addressing the long-standing export of raw materials over finished goods. Processed rubber products will remain eligible for export, while the policy encourages investment in local manufacturing of tires, gloves, footwear, and other value-added products. In the meantime, the Central Bank of Nigeria is strengthening its institutional capacity to support a stable and resilient financial system as Nigeria pursues its long-term economic goals. Olayemi Kadoso says timely and disciplined policies are critical to mitigating risks, maintaining stability, and building a more resilient economy. Here are excerpts.
Really and truly, another huge shock. Currencies stand, our own did not. Now, the president of the IMF had said months ago when this problem started, I was talking to the world community, said that, look, there's a direct relationship between good policies, macroeconomic fundamentals, and you're being able to weather the difficulties ahead. But those who've been able to do the right thing early would weather it. Those who are starting now would have a very difficult time. And she was absolutely right, because that's exactly what has happened. Okay. So that, I think, is something that for us in Nigeria has to be cascaded. And I think it was one of the things that DG was talking about. That has to be cascaded, because the outside world is moving at a phenomenal pace, and we cannot afford not to be moving at that exponential pace as well, because we've seen that if we do it right, we can weather it, but if we don't, we'll be in very serious trouble. And I don't have any doubt about that. So I think all the things that need to go with building capacity, building institutions, ensuring resilience, these are the things. These are the things that aren't negotiable for Nigeria.
In Ghana, the Securities and Exchange Commission has directed all market operators, fintech firms, and online investment and trading platforms to register and obtain the appropriate licenses by August 31, 2026. The directive, issued on June 23, forms part of the regulator's efforts to strengthen investor protection amid the growing use of unregistered online investment and trading platforms. The requirement applies to platforms facilitating access to securities trading in both local and foreign markets. In Mali, the nation has regained majority ownership of its national telecommunications company, Sotelma, reversing a privatization deal that had left the strategic asset under foreign control for 17 years. Under a 160 billion CFA franc, that is $277 million agreement, the Malian state has increased its stake in Sotelma to 56% from 49%, while renewing the company's operating license. The move reverses a 2009 privatization that saw Maroc Telecom acquire a 51% stake in Sotelma as part of Mali's economic reform program. In other news, Uganda has launched its country's Partnership Framework 2026 to 2035 alongside the Uganda Public Finance Review, outlining priorities for long-term economic development. The reports focus on strengthening public finance, improving service delivery, and supporting sustainable, inclusive growth over the next decade. Let's listen.
The timing of these reports is particularly significant. Uganda is implementing the 4th National Development Plan, advancing the 10-fold growth strategy, and preparing for commercial oil production. Their recommendations are therefore well aligned to our national development priorities. The country partnership framework lays out how the World Bank Group will support Uganda's ambition to transform into a modern, prosperous, and competitive upper middle income country by 2040. It emphasizes its emphasis on creation of more and better jobs, strengthened economic governance, and having healthier and better skilled people, better connected communities through access to quality infrastructure, and having a more productive and inclusive private sector resonates strongly with government's own priorities. Similarly, the Public Finance Review provides timely analysis as Uganda enters into oil decade. It reminds us that sustainable prosperity will depend not only on oil revenues, but also on strong institutions, efficient public expenditure, enhanced domestic revenue mobilization, and continued investment in people and productive sector. The timing of these reports is particularly...
Finally, on News Now for today, trading at the spot window of the Nigerian foreign currency market jumped 21.18% last week, leading the total turnover of $2.83 billion reported by the FMDQ exchange. The trading platform operator reported over the weekend that the spot and derivatives trading went up by 22.06% in the week ended June 26. Total turnover of foreign currencies traded at the spot window was $2.77 billion, while transactions at the derivatives window stood at $64.04 billion US dollars, led by increases in FX to forwards market, the FMDQ report shows. That's it on today's edition of News Now. The show returns shortly after the break with Grace at the FMDQ archives room, giving us market updates.
Once again, visionaries and decision makers from across Africa and the globe have joined to shape the energy narrative, not only for these continents, but for the world.
A platform where the continent's most transformative energy stories are being told and shaped.
Welcome back to Money Moves. Thanks for staying with us. Let's now go over to Grace for today's market updates. Hello there again, Grace.
Hi there, Melissa. Let's take a look at how the market started trading for the week, beginning with the equities. The NGX All-Share Index slipped 1.71%, while the BRVM in Abidjan gained 0.44% to 451.81. The Nairobi Securities Exchange edged up 0.18%, while in South Africa, the Johannesburg Stock Exchange rose 0.47%, Mauritius Semdex gained 0.06%, and the Zimbabwe ZSE surged 4.23% to 414.90. In North Africa, Morocco's MASI slipped 0.15%. Also, the Egypt EGX 30 declined 1.03% to 49,825.58 as at 14:09 GMT. To the currencies, the rand strengthened 0.13% to 16.43 against the US dollar, while the Egyptian pound gained 0.42% to 49.29. The CFA franc strengthened 0.49%. The Kenyan shilling also strengthened 0.02% to 129.49. The Moroccan dirham rose 0.05% and the naira weakened 0.38% to 1,381 naira 62 kobo as at 13:08 GMT. Let's switch into the commodities data deck, beginning with energy prices. Brent crude rose 0.60% to $72.42, while US WTI gained 0.92% to $69.87. Natural gas fell 2.29% to $3.20, and Arabian gasoline climbed 1.55% to $3 as at 13:04 GMT. To metals prices, gold declined 0.83%, while copper slipped 0.24% to $6.12. Platinum dropped 2.79%, aluminum gained 0.38% to $3,175.62, and iron ore edged down 0.04% to $100.33 as at 13:05 GMT. Now finally to soft commodities. Cocoa fell 1.59%. Coffee edged up 0.37% to $274.20. Cotton rose 1.07%. Palm oil gained 0.91% to $1,112.01, and sugar climbed 2% to $14.80 as at 13:06 GMT. And that's our Money Moves markets today. Back to you, Melissa.
Grace, thank you very much for those updates on how the markets closed on this first day of the week. And that's it on today's edition of Money Moves. From all of us here at the FMDQ studios, we say thank you very much for watching and bye for now.